Hello, folks. My name's Peter Lemieux with the Insurance Exam Queen, and going to start off our Monday by talking about personal auto policies. So I'll get my hot tea in my throat so I don't lose my voice. Welcome. I know with these live classes, you people haven't signed up for them, you haven't paid for them or anything like that. You're going to come in and out, check it out, and you're going to leave because you have things to do or you don't like the fact that the way I look and the way I talk, that's what happens. I can only tell you what I'm going to do. I'm going to talk about personal auto policies and likely questions that you will get on your exam. Now, what we want to do though in the time, what I want to do is try to make this understandable, not use a lot of insurance tech, vocabulary and things like that, but break it down to how it actually works. We do need to learn the words, so I'm going to talk about the words that you'll see on the test, but I'm going to try in my own way to make this understandable, the personal auto policies. For those of you that are taking commercial also, the commercial auto policies are really not that complicated. If you understand the personal, you just need to learn a few more things because I hate to say this, but an auto policy is an auto policy, whether it's for businesses or for individuals. Obviously, the commercial has a few things extra that they need to have, but the basic understanding of all auto policy is understood right here in what we're going to do today, explaining the personal auto policy. I have also found that this is not that hard for people to understand because we all, well, I shouldn't say all, there's always exceptions, but most people own auto insurance. They have purchased it. Some people have had claims on their auto policy and they have talked to their agent about coverage. So a lot of this stuff is experiential. I've experienced it. Where when we talk about commercial package policy, very few people have any experience with buying a commercial package policy, so it's brand new and intimidating. This one, not so much, I hope. So let's just keep the ball in the middle of the fairway, not wander off into the woods and things like that, and see if we can make sense of this. Uh, Princess McBride, it's time for you to pass. Okay, let's get this done with and go and start to enjoy the fruits of the insurance industry. So um, work hard for the next couple days and study every day, especially in the areas where you were weak on prior tests. But we're all pulling for you. Okay, so let me use some slides here to keep me from talking for 4 hours, which no one is going to stick around for. So let me do this. If you ever want to reach me, this is my personal email address. I do try very hard to answer all the emails. Why would you want to reach me? Well, it could be because you want to buy me a Christmas present and you want to know what I would like, and that would be fine. But otherwise, people do ask me specific questions. I had this question. I don't understand why this is the right answer. Now, I'm not a genius and I never got 100% on a test, but most of the time I can answer the question and help you out. Or just directions like which areas are most important for me to study in, or things like that. As long as it's a simple question that I can answer with one email, I'll be happy to write back to you. Now, what I can't do with an email is I need to review um, business owners' policies and commercial package policies. Can you do that? Not in an email. Okay. Then we have to talk about booking a tutoring session with me, which I can give you information on. But right now, this is just how you reach me. Just think of old Uncle Peter, who's been teaching this for a long time and helping out my good friend Melissa Dillon, who is the insurance exam queen. But that's how you reach me. Okay, let's get started. Well, this is cute. Personal auto policies. And it had a moving screen. I can assure you I did not make that slide, but you probably knew that. Now let's take a look at this slide. A personal policy, um, sometimes called a PAP, PAP, personal auto policy. It provides coverage for individual drivers and their vehicles. Well, that's pretty simple to understand. That's pretty basic. What are the parts? Whoa, we've got 1, 2, 3, 4, 5, 6, and then an optional seventh part we have to learn. Let me just say this in parts on uh, P&C policies. You've got parts on dwelling policies. You got parts on homeowners policies. You got parts on auto policies. Three policies that kind of dominate the test, and they're different. Parts are a little different on each policy. And you have to know in an auto policy which part covers the auto. Okay. If you're not familiar with that, may I make this suggestion? What I did, and again, I'm just an average guy. The only reason I know so much is 'cause I've done the same thing for 50 years. And so uh, after a while, it kind of sinks in, right? I had a sheet of paper called dwelling policies, and I put part A, B, C, D, etc. Then I had a sheet of paper that said homeowners policies, part A, B, C, D. And then I had a sheet of paper that said auto policies, parts A, B, C, D. And I kept them separated from each other because I don't want my brain mixing up. Oh, that was the dwelling policy. If I have them on separate sheets of paper and I look at those and I study them, and if I'm confused about some things, maybe I make some flashcards. But if I have on separate sheets of paper, what we can avoid is what I would call mental bleeding. That is to say, I get dwelling policy and homeowners policies mixed up on parts because there are some parts that are different. Okay. So we've got to get them clear and just make those sheets. This is our part for the auto policy. And we're going to start with A. We learned that back on Sesame Street. Alphabet, Part A. Part A of a personal auto policy is liability. Now, let's just be clear. Liability can also be called casualty. What we're doing with liability is we are not insuring you. We are not insuring your autos. This is why we call a personal auto policy a liability or casualty policy, not a property policy. Do they cover property? Sure. Look at Part A. Part A in dwelling policy and homeowners is the dwelling. That's why they're called property policies. Auto, Part A is liability. That's just why we call it a casualty policy. We look at Part A. What is liability? Liability is you are actually insuring someone you don't know. It's someone you will do damage to their property or their bodily injury, but it'll be your fault and they'll have a loss. And your insurance is going to take care of them, not you. Liability covers people we don't know. Hopefully, you'll never have a liability claim where you hurt somebody else or their property. But this insurance is designed to do that. And Part A is liability. So, what is this? You are responsible for bodily damage, injury, and property damage of people you crash into. Fair enough? Absolutely. Do you know on the auto policy in your state, this is required by states that you carry this? Do you know what's not required? That you cover your own car. That's optional. The state is always interested in protecting the public. Whether you cover your car or not is up to you, but they want the public covered. You're going to be driving a 3,000-pound piece of metal at 50, 60, 70 miles an hour down the road. You can kill somebody. You can do serious damage, and they want the public protected from you. That's why they require liability coverage. Okay. Um, Now, liability limits, aggregate. What do we mean by that? There is like a bucket of money. Here, we'll try to. There's like a bucket of money that the insurance company sets aside if you hurt somebody or their property. Maximum aggregate is the most. See the word maximum? The most your insurance company is going to pay on a claim. That's why we use the word maximum. Now, this right here is, we're going to explain this one, a split limit liability. We cover $25,000 for bodily injury per person, 50,000 for bodily injury total, and 20,000 for property damage. Those are maximum limits on that policy, and your insurance company will never pay more than that on a claim. Maximum available amount for all claims in a policy period. Sublimit of liability that put on each claim and accident. That first line, maximum amount per policy period, I'm going to clear that up in a second. I haven't explained that very well yet, but I am going to. I promise. Split limits, separately stated limits for bodily injury and property damage. Now, liability limits aggregate, big bucket of money, is a policy that does not have split limits. It just has aggregate amount. So I'm going to the slides may do this for me, but I'm going to say you buy a policy without split limits and you have $200,000 of coverage aggregate. What they mean by that is we'll pay $200,000 of claim, whether it's bodily injury, property damage per person, they don't care. If there's claims, we'll pay. Once we hit 200,000, insurance is done. They've paid their amount. But you could hurt one person for 75,000. This policy will pay that. They'll pay bodily injury, whatever. They don't split out the limits. It's easier to understand. Okay. This is maximum amount my policy will cover regardless of the situation. And that's what we call aggregate. Okay. Now, then we can have it per occurrence. And that's where we get split limits. If you just had an aggregate policy, they don't do this. Aggregate policy is the most the insurance company will pay in a policy year, not per occurrence. That's very, very important to understand. I'm going to move off this slide to try to get back to that. This looks like an intimidating slide, but let's just take a deep breath and say, this is simple. People a lot dumber than me have passed this test, so I can get this, okay? Liability, you're responsible for bodily injury and property damage that you hit. Liability limits aggregate. Boy, this is small print. This is a review of what you've already seen. Maximum amount they'll pay, and then sublimits and split limits. We've already talked about that. The third one is the last slide I did. Let's go down to the bottom and use some examples, okay? Number one, there was an accident. I don't know if you can see this, but there's 4 people injured. The little guy there is $5,000. Then they got, looks like daddy, 30,000, mommy, 20,000, and then another child at 15,000. What's going to happen? Well, this particular policy has limits of 25, 50, and 20. Am I losing you guys? Try to hang with me, okay? Because I know this is not exciting, but it's on your test. That first person with the biggest claim is $30,000. We cannot pay all of that because we have a per person limit of 25. So that person with 30,000, we can only pay 25 of that claim. Then we have a person in at 15,000. Well, it ends up that we can pay all of that. And so far, the insurance company has paid a total of 40. We have a maximum of 50. So that person, we have $10,000 left to put on the next people. But we cannot go over $50,000 total. What it says is if you have this terrible accident and these people have those type of bodily injuries, the insurance company can't pay all of that. 5 and 30 and 20 and 15, I think is like $70,000. The maximum they're going to pay in bodily injury is only 50. Okay. And per person, we got one person there that's over the single limit at 30. We're only going to pay 25 of it. Bottom line, person one had 30,000, 15, and 40. How much did the insurance company pay? $40,000, and there's only $10,000 left. Parts of liability limits aggregate. Sis, dad, it's sis, dad, mom, and bro. Okay, here we go. Oh, I see what we're doing. We just blew up the slides so you don't have to strain your eyes so much. Okay, we got this. We know what everybody had. We got a 25, 50, 20 limit. So what we're going to do is we can pay 25,000 on dad and all 20 on mom. That's $45,000. We have $5,000 left. So we could pay all of sis and none of bros. Okay. What they did is they paid 10,000 on bro. I know what the answer is going to be here. We could pay all of sis's or 5,000 of bros. The situation is, my friends, that there's $70,000 worth of bodily injury in this claim. Your insurance is only paying 50. Why? That's the maximum total bodily injury. And what you have to do if you get a question like that is you just have to break down how much do we pay on these things. So, number 2, your part A liability 25, 50, 25, you injure 3 people. We'll make it simpler, right? Person 1 had 30,000, person 2 15, and person 3 40. You got to be able to figure out what your insurance company going to pay. And remember, they will not pay more than 25,000 to one person. Okay? We got 30,000 on the first one. We're not going to be able to meet that. 15 on the second, 40 on the third. I only have a $50,000 limit. I'm looking at $85,000 in claims. You're going to be short on this one. What happens when you don't have enough insurance? You personally are responsible for the difference. That's why you should carry a decent amount of insurance. So we got 40,000 on the first 2 that we can pay. We're only 25 on that first guy, right? That's the most for a person. We're 15 on the second, and we only have 10,000 left for the rest of the claim. That adds up to $50,000. But if the claims are 80, you personally are going to be responsible for the remaining $30,000. I'm not going to go through this big slide, okay, because it only summarizes what we've been talking about. Let me go back. I have to go back here and put my picture on there because I want to make sure if you're confused that I can clear it up. Um, so how we doing? You can't talk to me. You got to write it on the chat box. I'm a little insecure just throwing out numbers to you. I mean, I know in my brain how this is going to work, but that's not important. What's important is this makes sense to you how those claims get paid? Because you'll get one or two questions on the test that are just like this. How much can the insurance company pay? So you got to understand the first one's per person, the second one's total bodily injury, the third number is property damage. We haven't even talked about property damage yet. Are we okay? Can I continue on? I want you guys to not be confused. We're going to now move to part B. However, I want to explain something. If you have an aggregate policy, no split limits, just $200,000 total, one of the things you need to know about an aggregate policy is that's the most coverage you have in a policy year, not per occurrence. So if I had a $200,000 of insurance and I got 80,000 of claims, that aggregate policy would have paid all of that because they're not restricted to so much per person. But what happens in an aggregate policy is you lower the amount of insurance you've got for the rest of the year. If I have 200,000 and we pay out 80 in claims, if I have another accident, I only have 120 left because the aggregate policy is the most insurance you have for a policy year. When we go to split limits, 25, 50, 20, those are available for every occurrence. So if your insurance company paid 50,000 on one accident and 6 months later you're responsible for another one, they start all over again. You got 25, 50, and 20 because it's for each occurrence. So I want to make sure that you understand that and that one doesn't get away from us. Part B is called medical payments. Now, medical payments is coverage for you and your passengers, up to 3 years, a per person limit. What's important here, when we get to B, medical payments, we are no longer covering people you hit. We're covering you and your passengers. Peter, what about the people I hit? We've already covered them in A, right? We're going to cover bodily injury and property damage for the people we hit. But what about me and the people in my car? You can collect on Part B medical payments. There's definitely limits here, okay? When we say up to 3 years, sometimes if there's an accident, we think we're fine and we don't find out till later that there is some back damage or something. And so claims come in well after the accident, but it can't be longer than 3 years from the accident. Okay, here's the biggest thing about, second biggest thing, medical payments. It has a per person limit, which is usually small, like rarely goes over $5,000. So if you have a broken arm and you go in and you get it set and you have some physical therapy and it costs you $3,000, your medical payments can probably just pay that. Okay. If it's 20,000, you're going to probably find out that it only goes so far. Okay. It's to cover you and your passengers for medical bills, regardless of who's at fault at the accident. The purpose of this seems to me is $800. We're not going to argue about it. Just go get it done and we'll pay for it on medical payments, right? If it gets serious, $20,000, $30,000, now medical payments won't go that high. Okay. It covers you and your passengers, not the other guys. So we got to get those things clear, medical payments, before we move on to our Part C. Part C is uninsured and underinsured motorists. Okay. It is exactly what it says. If you suffer damage from someone who carries no insurance, you're going to look at your Part C. Or if you suffer, say, $30,000 of damage, and the person had insurance, but they only had 25, they were underinsured, we will look at your Part C to see if we can pick up the coverage. It's for someone who's uninsured or underinsured. So, what is an uninsured motorist? No insurance or no Part A insurance. I've never heard of that. If you got car insurance, you got to carry a Part A. A hit and run case would be uninsured motorist because I've got damage, but I don't know anything about the person who hit me because they disappeared. And it's not my fault. So we can collect on uninsured motorists. Underinsured is they don't have enough insurance, not enough Part A, liability. They hit me and they don't have enough coverage. That's what we see on uninsured and underinsured motorists. Bodily injury coverage for you and your passengers if they are hit by someone who has no or not enough insurance. Now, Peter, what about my car? Because somebody hit me, I'm fine, my car's wrecked. You can't collect on uninsured and underinsured motorists because it only covers bodily injury. Please note that. If you have damage to your auto, we're going to move on to Part D. So there's some things in here I want you to be very clear on. Uninsured and underinsured motorists cover your bodily injury only. So it's kind of like coverage for med payments only when someone else is responsible and they don't have enough coverage. They're going to cover your bodily injuries. So I want to do this to make sure you guys are with me, okay? They are only going to cover up to the amount you purchased. So if you purchased 25,000 bodily injury on your uninsured motorist and you got a hit and run and you have 10,000 but your passenger in the car has 20,000, you haven't got enough insurance. It's only going to pay 25, so you're going to have to pay 5,000. All right? That only pays to the limit you purchased. Now I got to make a point, and I want, if you've been daydreaming or sleeping so far, this is something you got to focus on. That uninsured motorist is so often misunderstood. If I bought 50,000 of uninsured and underinsured, and the person in the car hit me, and they only have $25,000 of coverage. If I have 25,000 of underinsured, I will collect nothing. Whoa, what you talking about, Willis? Hey, I have underinsured. This guy's underinsured. I'm short 25 grand. I bought 25 grand. Underinsured motorist pays the difference between what they had and what you have. In the example I gave you, I'm only carrying 25. The guy who hit me was 25. There's nothing left to pay. If I carried 50 and they had 25, I don't have 50,000. I have the difference. I only have the 25,000. Now, I know if you're just listening to me, that can be very confusing. I don't have the advantage of a whiteboard or anything like that right now. But I had to get used to figuring that one out. On underinsured, where they have insurance but not enough, my underinsured motorist must be higher than theirs to collect anything. So just on a practical level, when you look at your auto policy and you look at UM and UIM, it should be more than the state minimum, because if you have the state minimum on underinsured, you're really not carrying anything. So you should have it higher than that. Now, I got to stop for a second. Please, if that did not make sense to you, make me clarify it by writing a question on the chat box now, please. So there's no questions, which means it made sense and you guys are cool. You're going ahead. or you have been put to sleep by my teaching and I have no way of knowing. Okay. So, anyway, we're going to try. Folks, I just want you to, there's some subtleties I want to make you understand. Med payments only pays you and the people in your car. Okay. Underinsured motorist, you must have more coverage than the person who hit you because the insurance company is only going to pay the difference between what they had and what you have in your UIM. Now, if you got that clear, they can't or shouldn't be able to trick you with a question. Okay? Now we are going to move on to the lovely part D. This is how I cover my auto. Now, I said earlier, most states require people to carry auto insurance, but they only require you carry liability. Part D is technically an optional coverage. You do not have to cover your vehicle. Now, in every class, there's somebody who says, wait a minute, when I bought insurance, I had to cover my vehicle. That's not an edict of the state. That would be required by a lender if you borrowed money to buy the car. The bank or wherever you borrowed from will say, since we're loaning you money, you must carry Part D. So, those of you who think it's required, it's only required by the lender. If you have a cash car that you paid cash for, you have no loans on it, you can cover it or not. It's up to you. That's not a required coverage. So that's the thing I want you to understand. Now, they will pay out the repairs or the cash value of your car when it's damaged by collision and other than collision. So we need to understand what's collision and what's other than collision. Also, I want you to understand that they're paying actual cash value. Okay, so I want to explain those two things as best as I possible. First of all, a collision, hit or crash into something. They will pay out the repairs, actual cash value of your car when it's damaged by collision and other than collision. If it's your fault, right? You back your car into a telephone pole. There's no one to blame it on but yourself. You're carrying collision to fix that car. All right? That's what you carry it for. If someone crashes into you, that's on their liability. However, you can collect on your collision and pay a deductible. And I'm going to explain that coming up. Collision is a crash into something, it's a car crash. Okay. Now, other than collision, things that happen to your car, like Mother Nature. Okay. It's more passive. Um, Fire, vandalism, hit an animal. You're not driving down the road trying to hit an animal. So we assume animal ran into you. Hail, right? Flood, earthquakes. You weren't even driving the car and it got damaged. That would be other than collision. Now, I know this is not the most exciting way to spend a day, but let me explain an example. Car, tree. Tree damages the car. If you drive into the tree, that's collision. However, if your car is parked and it's a dead tree or a windstorm comes up and the tree falls on your car, that's other than collision. So it sounds like the same thing, but it isn't. It's was it passive or were you involved in an accident? Okay. Collision and other collision. You have to know those. Now, limit of liability is the lesser of repairs for actual cash value. Now, if you say that to your family at dinner tonight, they are going to all get their plate of food and go watch TV because that's not a line people care about. But let's explain it for you and me. Your car gets totaled. The insurance company is covering your car for actual cash value. Your car is worth, it's a used car, it's worth $12,000. Take it to the repair shop. and they say it's going to cost 14,000 to fix it. The insurance company will pay the lower of the two. If it costs 14,000 to fix it, they're just going to total it and give you the 12, what it's worth as a used car. If they can fix it for 8, they'll fix it. The insurance company will always pay the lesser of the two. Okay. And they're only going to pay actual cash value. They're not going to pay you enough to go and buy a new car if you're driving a 2016 vehicle. They're going to they're going to give you what Kelly Blue Book or whatever it says your used car is worth. That's the actual cash value. Let me stop. Is this making sense? Are we okay? It looks to me like so far I'm doing okay. Let's keep talking. Ooh, that's all there is on coverage to the car? Yep. We're running through this thing pretty fast. This is not an in depth, detailed teaching you would get with Melissa's gold plan. Okay. This is a flyby. Okay. These are the things you got to know. If you don't know them, put them on flashcards, take notes. But we want to make sure we don't get ourselves mixed up on the basic fundamentals of the coverage. So, what the heck is Part E? Part E is duties after a loss. You're going to find Part E and F pretty simple. I would say get clear on A, B, C, and D for sure. Okay. Part D is duties after a loss. What the heck would that be? Common sense, my friends. If you want the insurance company to pay for it, communicate with them. Tell them you had an accident. Describe it to them. If they have forms that need to be filled out, fill them out. Okay. These are your responsibilities. Hit and run or theft, get a police report because those are crimes. And you want a police report, even if they never catch the person, a police report showing that you were a victim. Okay. If there's crime, get a police report. Ooh, that's all they're going to tell us about duties after a loss. There's other ones like protect the property from further loss. Don't leave it out in the middle of a highway for a week where people can just pillage it, go through, take out everything that's in the car, gut it. You're supposed to protect the property. Insurance company expects that of you. Okay. These are duties after loss. They're all common sense. Remember this. I want insurance company to pay for this loss. Do what they need so they can get the payment to you. Now we're going to go to part F. Part F is affectionately called by Uncle Peter junk drawer. We all have a junk drawer in our house, right? You know what that is? I don't know where this goes. I'll just put it in the junk drawer. Where are we keeping can openers these days? We'll put it in the junk drawer. Everybody's got a junk drawer because we don't know where it goes. That's what general provisions are. It doesn't fit in A, B, C, D, E, but it's in the policy. So where do we put it? We stick it in general provisions. Okay. It is the junk drawer of our policy. So what do we find in there? These are things that let's just start on the left. Bailey, if someone's taking care of your car, they are your insurance isn't going to pay if your car's in a repair shop and they damage it. No coverage for Bailey. The Bailey has to fix your car. Bailey is someone who has possession of your car with your permission. Okay, not somebody stealing it. Okay. In the case of an accident happens while the mechanic is test driving your car, it's the responsibility of the repair shop's insurance company to pay for damages should he crash it. Okay. The Bailey will not benefit from your insurance, I should say yours, as it will be covered under their commercial auto. No coverage to bailee. See that? No benefit to bailee. What's this bankruptcy thing? If an insurance company files for bankruptcy, they still have to pay the claims. So I want you to think of this. Bankruptcy does not mean they're broke and they got to close down. It means they're reorganizing their debts. And they can't just declare bankruptcy and not pay their claims. Okay. It has no bearing on the claims. Also, things like you can rent a car. If you have that coverage, where do we put rent a car coverage? It doesn't fit in the others. We'll put it in a junk drawer, part F. Now, subrogation is very important. It's a word you have to know. Let me just go ahead to the slide, see if they explain subrogation. Here we go. Subrogation, the right of the insurer to take legal action against a third party that caused the loss to the insured in order to recover the amount paid for the insurer for the loss. So let me tell you how Peter explains subrogation in the real world. My wife and I are discussing something, and we hear a crash in the kitchen. We hurry into the kitchen, and our 12-year-old son, while swinging his lightsaber, has knocked my wife, his mother's favorite vase, to the floor where it is shattered. And he's sitting there saying, "Sorry." She's very upset. I'm upset. She's upset. Son is sorry. So here's what we did. His father, that would be me, subrogated. And I explained to him, son, you're paying for this vase. Since you don't have the money to pay for it right now, I will buy a vase for your mother and you must pay me back by doing chores till you have paid it off. That's subrogation. I paid it. I'm not the guilty party. I collect from the guilty party. So, how does that work in insurance? This actually happened to me. Somebody hit me rear end. They were responsible, got a ticket and everything. And then we put in a claim, and it was clear that his insurance, even though they had the right information, were going to take their time fixing my car. They wanted paperwork done by snail mail, and I'm in sales. I can't sit around. So I contacted my insurance company and I said, "Can you guys fix this on collision?" They said, "Sure. You have to pay your deductible, but we will fix it." And I got it fixed like in a day. And I was out selling, but I was out the deductible. My insurance company then subrogated against the guilty party's insurance. Let them fight and let them talk insurance to insurance. They got paid. When they got paid, they paid me back my deductible. They subrogated. They made the payment and they subrogated against the guilty party. That is explanation of subrogation with the lightsaber example. Transportation expense, you can get a car for $20 a day or whatever it is that you can get. Where do we put that coverage? In the junk drawer. It's in the policy, but it doesn't fit in the other ones. So we put it in general provisions, right? Uh, actually, I have covered the major parts of an auto policy. Umbrella policy is a separate policy that a lot of times people buy because they may need it. So I'm going to talk about this umbrella policy for a few minutes, and then I'm going to do a quick summary of things you want to remember for the test. Okay. Let's talk about this umbrella policy. They provide additional coverage in excess to the primary policies of home and auto. Home and auto policies, homeowners and auto policies come with a certain amount of liability coverage. Now, a lot of times people look at that and say, holy cow, I got $100,000 of liability coverage. If I lose control of the car and go into a Lincoln dealership and wreck 3 new Lincolns at about 100,000 each, I haven't got anywhere near the property damage to pay for that. I want to get more coverage, okay? So that's the problem. You can get an umbrella policy, but first of all, you can talk to your agent and see how high you can raise the deductible on your policy. But homeowners and autos have relatively low, how can I say this? Maximum limits. You know, you may only be able to go to 100 or $200,000, and you're saying that's not making me comfortable. So what you can do is you can supplement it by buying on the side an umbrella policy. An umbrella policy can stand alone. So what happens is, in an emergency, you tap into the umbrella to pay the remainder of the bill because you didn't have enough coverage on your auto or your homeowners. That's the idea of an umbrella policy. Excess form follows form. If you have excess umbrella policy, it covers the exact amount of the exact coverages of your auto or your home. Let me be clear. On auto and home insurance, my dear friends, you are only covered for bodily injury and property damage to others. What's wrong with that, Peter? There are 2 other coverages that businesses have that you may want to be covered for. I don't know what you do or whatever like that. But if you want personal injury or advertising injury, let's just talk about personal injury. What's personal injury? You damage someone's reputation so badly that they can't get a job or they lose a job or something like that. Now, I'll make up a situation. You're a big famous internet YouTuber and you got a big following and you say something nasty about a competitor or a person you don't like. And then all of a sudden you get a letter from their attorney saying, because you said that, this person has lost income. We're suing you for personal injury. That's not covered on your auto or your homeowner's policy. But if you got an excess policy, they won't let you add it. Excess policy covers you more amount, but same coverage. What you need to do, this is making some sense, is you can get an umbrella type policy. Now, think of an umbrella. It goes up and out. You can have on an umbrella policy, not excess. You can have on an umbrella policy, you can add personal injury that's not covered on your other policies. Okay? If it's excess, all you do is buy more of the same. You take your $100,000 up to $1 million. It covers bodily injury and property damage. But if that's not enough, you can go and get an umbrella policy, which can stand on its own and add coverage like personal injury. Now, there is something on there that's on your test called self-insured retention. To understand self-insured retention, think of a deductible. The insurance company says, let's use a number. You want to buy $1 million policy. Insurance company says, fine, but you got to pay the first amount. Now, if your policy, your auto policy pays 100,000, that might cover what your umbrella wants. But if they don't pay it because it's personal injury or something like that, you are responsible for the first certain amount, which is not called a deductible. It's called self-insured retention, SIR. Now, that's a mouthful of stuff I said, and I want to make sure that that reasonably made sense. So let me summarize it this way. If you get an excess policy, you're buying more coverage for the same things, bodily injury, property damage. But if you want an umbrella, now what is SIR? The SIR would say something like your 100,000 of auto satisfies the SIR, okay? But now you get an umbrella policy to cover like personal injury for $1 million, and it's got $100,000 that's not covered on your homeowner's policy. That becomes self-insured retention, which means you have to pay that amount out of your pocket. It's a deductible. Now, how are we doing? Did that kind of straighten out excess, umbrella, self-insured retention? It's Monday, Peter. We don't talk insurance till Tuesday morning. Okay, have we kind of got that? I know you guys are super smart. Okay, let's see if there's something on here I haven't talked about. Umbrella policies provide additional coverage. Standalone policy, if there's an emergency, you can tap into the umbrella to pay the remainder of the bill. In other words, standalone is you didn't increase your coverage on your homeowners, you just bought an umbrella policy. An excess policy only covers bodily injury and property damage on your policies. But if you have an umbrella type, because an umbrella goes out, you can add personal injury or advertising injury as coverage, but you have to pay the first amount. And that's not called a deductible. It is called self-insured retention. So much. That's all there is. There ain't no more. That's my address. If you want to contact me, I have another email address, which is fine. It's just longer. Peter Insurance Exam Queen, no space. Peter Insurance Exam Queen at gmail.com. I just think it's simpler to just write directly to me. I get them either way. Okay. If it's just a question, I got one. What if it's a suggestion? Peter, I sat in on your class. It would be a lot better if you wore a top hat and sang some of the information. Send it to me. I won't be doing that, but send it to me. I'll listen to you. Okay. If you got an idea to make it better. All right. I'm here. If I can answer it in a simple email, I will. If you want to have a tutoring session with me, that actually costs money. Imagine that. But I'll give you all the details of how we can work that out if you're interested. But I'm Peter Lemieux with the Insurance Exam Queen. We want you to pass the test. Melissa has tons of stuff on her site to help you pass the test. Use it. Buy her course, gold or silver or whatever you bought. Watch the videos, take notes, take the Quizlets, take the quizzes she has for you. Okay. There's just tons of things in there to help you. And she's always updating it. She goes so fast that I can't keep up with her with my bicycle while she's on a motorcycle. But anyways, she's doing great. She's wonderful. If I can help in any way, let me know. Does anybody have any questions before you guys take off and eat your 3-course lunch? It's been my pleasure to be with you. Come see me again if I can help. I can't find Qui. Marilyn, can you help me out? What can't you find? It's behind the pickles in the refrigerator. That's where it is. Cannot find questions? I don't know. She's got Quizlets. Maybe you have to take her course to get access to the quizzes and Quizlets. I'm not sure. If you have a question about the insurance or the quizzes, if you have a question like that, I don't work on her website. They didn't trust me. Just send an email to the Insurance Exam Queen and say, I want to take quizzes. How do I find them? Okay, that's fine. Just write an email to them. I mean, if I know it, I'll tell you, but you find out there are things in the universe Peter doesn't know. All right. It's been fun. You guys have a great day. We should do right now, those of you that are left, go open up your policy, your auto policy, and see what you have for coverage A, B, C, and D. Okay? See what kind of coverage you got. And what's your underinsured motorist coverage? Do you think it's enough? Um, make sure you carry enough liability. You don't want to accidentally hurt somebody or their property and not have enough coverage. Great session for me. I hope it was beneficial to you. If I can help in the future, look for live classes and I'll be teaching them. I usually teach about 3 a week and work with the insurance exam queens. Please, 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 folks, study every day. Study something every single day to keep your mind on the topic. Pass the test. That's what we want you to do. So have a great day. It's nice being with you. And if I can help in the future, let me do that. Bye now.